something earlier today on this damn chart with this time zone shit. And that's the only way I can show y'all the accumulation zone is with the at the right time frame. But I'll figure it out and I'll show y'all in that next group. That way I ain't confusing nobody, no way. All right, so what I'm looking for, as y'all know, is that immediate market area, starting with the first noticeable change in direction. So from this high to this low, then from that low to this high right here. So this is the trap. So it's starting off there. I don't know what time frame you was on, Tina. I think was that the 4-hour chart?
Yeah, the 4-hour is the one that we were a little, because the day chart, the high is exactly where you're going and the low is where you're at. That's what I have for my high and low.
I got something like that.
Oh shit, Tina.
I'm just playing.
No, that's exactly what I got on my 4-hour.
All right, y'all, it's cool. I'm recording right now.
Yeah.
All right, y'all know they on this compliance shit, so I gotta go and do this real quick. Oh, damn, I gotta request permission from Tina. She the host.
Oh, but she was sharing.
Yeah, I turned her to the host and shit. Okay, there we go. All right, just stay compliant. Y'all know this is not financial advice. Simple as that.
Wow.
All right, so let me go on the 4-hour chart. And what I'm doing now, this area look good, you know, but really, and if I do this high right here, it's gonna get blowed out. So that just generally means that the moment the market opens, it's gonna blow out that high. So I want to go to the next relevant space. So what you really want to do is, if I'm looking for noticeable change in direction, I'm gonna go from this one, this bullish noticeable change in direction, as one, and I'm first do this high. Sometimes it's easier to either do the low, other times it's easier to do the high to figure out where the low should be. So if I start with this high, next noticeable change in direction will be right here.
Okay, that's what I picked for my high on the 4-hour.
So that's a good point. Now, really to just touch on accumulation zone real quick with y'all. That's basically, you see these retests, these wicks?
Mm-hmm.
This is basically the market grabbing buy orders, or grabbing these grabbing these buy orders real high, and it's trapping them. You know what I'm saying? So it pulled down and it hasn't went up there. The best way to see that is basically called a 3 count. When you get 3 wicks right in the same area, this is why 38.2 zones and everything like that work too. But the accumulation zone is the market accumulating orders. Basically, they run in price to grab orders, and then they keep you in the drawdown. Now, within accumulation price, it can be anywhere from 25 to 50 pips as far as they want to go, basically. But this is the first area that they grabbed orders. All right, for those buyers, those high buyers, we call them high and tight, for these high buyers up here. And basically they grabbed the orders and they ran it down and they never went back up there. Then the next place was generally right here. But when they grabbing orders with these wicks, generally they never go back to the same area because they want to keep those buyers trapped. And it happens for the low end and everything like that. But in our next group, I'm going to show you exactly how to identify the accumulation zone, because it's something called an Asian channel. And that's what we're going to start to talk about next. Just give you a quick heads up on that.
So just to make sure I understood, so those wicks, is that?
I'll go back to you. I hear you.
Oh, okay. Are those wicks true for a sale as well, or is it only on buys?
Yeah, for the sale too. And okay, so what it's called is an Asian channel. And at 5 o'clock, thank you, baby. At 5 o'clock, basically, the market is hold on, y'all. Come on, man. Go ahead, go. Oh, Oh, I thought you was giving that to me. Close the door, baby. Hold on, y'all, 1 second. Baby, anytime. Both you and Grayson the same way. All right, shh. Come on. Well, you're a little boy. You're a little. Go ahead, close the door from the two. All right. Yeah. So Tina, it is the same thing for sellers as well. And the best way to put it is, when you get in those trades, sometimes the market is just wick up real fast. Now, naturally, you can be going in the same or in the right direction, but it'll wick up real fast to pull orders from either side, either it's the buyers or the sellers' orders. And it basically has a range of 25 to 50 pips, but it's called an accumulation zone. And it happens during what we call the London or the Asian channel, which is at 5 o'clock p.m. But you got to think Eastern time because we Central. So at 5 o'clock p.m. Central time, if I want to see where they were pulling orders, but I can't. Oh, I got the time right here on this chart actually. Let me see. Let's go find a real quick accumulation zone. But I don't want to get sidetracked because I know everybody not at this point yet. Okay, so 5 to 10, where's 10? There's 5 to 9, basically. And what I got to do is I want to go to that low, which would be right here. And this high, which would be right here. So this was the start of basically the accumulation area, if you want to call it. And the market began to pull short orders. So it pulled these buy orders, I'm sorry. It pulled these higher buyers up here. And then you got these three consecutive candlesticks coming down. So they started to kind of draw back a little bit. And it's usually, like I say, between 25 and 50 pips, because that's naturally where most people put their stop losses at. And anything textbook, you got to think about that. These banks, they know they can read textbooks too. So they know where generally people will put their stop loss 40 pips, whatever the case scenario may be, but 25 to 50 pips. So you see it grab these buyer orders up here. So if they would have got in up here, let's say this buyer, he bought high and tight up in this area. Naturally, when they pulled the market down 92 pips, his stop was down there. All right, same over here. When they pulled the market down 72 pips, their stop was right there. So as you can see, they took all those buyers out, all those buy stops out, or buy limits, I should say, took all of those out, and then it went in the natural direction. Same thing over here. You can always find accumulation zones based off of where you see those wicks at, but you always want to start at the London channel, which is at 5 o'clock. And this is basically what they call a market maker method. And this is something we're going to get into as well. Then you see it happen again. They hit those high orders, hit them up here. Now, this don't mean that they was going the wrong way. They going the right way. But what it's got to do is they get paid off the orders, you know. So when they pulled the market back down 138 pips, everybody who had these high and tight orders up here, they stop losses getting hit. Same thing over here. Stop loss got hit, 98 pips, 91 pips, and then the market went up and started to go up at least for the end of this week. All right, so I just wanted to touch on that real quick to give y'all a quick idea of what the next stages is.
And that's like when you say the London channel, that's 5 a.m.
5 p.m. Yeah, Asian session is 5 p.m. to 10 p.m. So London channel. Remember what happened during Asian session is always a retracement. So there's always a retracement during that session. So when I kind of was saying that, I was just kind of prepping you for understanding this accumulation area, because at 5 p.m. the market basically is in the Asian session. And if the market was going up during the Asian session, naturally it's going to do a trend, a pullback, or a drawdown, retracement. I'm losing my mind. It's going to do a retracement. during that session, just like as we did here. And this is a 4-hour chart, so the candlesticks, you know, it don't look like it did a lot, but that's 53 pips just right there within that zone. So all these people who got their stop are these high and tight buy orders all the way up here. They stops naturally got ran. Even high and tight buy orders right here, they stops got ran as well. And I'm gonna show you how to basically get into that in this next group. And like I say, everything is gonna kind of work together. That's why it's important for y'all to understand channels. Okay, so let's get into, let me finish this setup real quick so we do our channels. My shit crazy over here. But y'all, ladies and gentlemen, you don't gotta worry about that right now, but I did want to give y'all a quick idea of what's to come next. Same thing here. Look for the noticeable change in direction. This would be the immediate low. The immediate high would be right in between there. Boom, 15 minutes, real quick. High. Then we got the low right here. Uh-oh. Matter of fact, nope, that's not it. This will actually be right here. So this will actually be the high. Then the low will be right down in this area. Now I'm gonna hurry up and draw my fibs real quick based off of the market direction. $38.2, 1.41,466. $1.41,466. Oh man. Yeah, my hour. It's right on the 38.2 as well. I mean, right on the daily support. 141. What is that? 340. One, 139. Now we're gonna start on our channels real quick. Get our channels going, and let me pull up the notes for y'all. I gotta send a updated version of that PDF I got in there. Haven't had time to do it, but I'm gonna update it possibly this weekend. 'Cause like I said, some stuff needs to be changed. All right, so let's start with the hour channel. Let's pull up our line graph. And let's see what we got. Look at that shit. And we just might have enough. Two, one. All right, I'll start with this one. This one a lot easier. All right, so this is really the best high that I'm gonna get when it comes to this, unless I go here, 1, 2, 1. Oh, I can go there. That's cool. So I'm going valley, I'm ending on the base. Finally, I'm going from valley to peak. Ending off on the base. And of course, I can't get the last one. No time. Will not let me get it. See. Let me see. I might only be able to intersect the valley. Nope, I guess it is. Gotta be this one. So still valley to valley. I just gotta use the higher time frame. Gotta bring this one all the way down to the base. So when you're drawing your channels, remember base to base or whatever area that you started at. Another thing, if you can't get all three, remember this could last resort after I check that daily chart. If I can't touch 2 valleys on my last channel or 2 peaks on my last channel, then I can do what's called, I can intersect it into one that already, like the market is obviously going up. You know, it came off of a peak. But if I can't hit that, that'll be my next option. But usually that's your last option after you at least try the daily chart. So in this case, probably a good time to, or a good example actually, because it seems like we couldn't get it off the hour chart. So I'm possibly have to go to my daily chart. And what I'm doing is I'm going from peak or valley to peak because the market is coming down. So I start at the peak, going through the valley. Then this final one should go peak to peak. Ended at the base. All right, let me identify the area. So I started off at the valley. So the valley just means that the valley is like the upside down V. This trading in the fluctuation of prices. These peaks and valleys are for. The peak is or the valley is the noticeable change of direction. The market from going from being an uptrend to a downtrend. The peak is a noticeable change of direction. The market from being a down to an uptrend. So let's identify those. That first channel that I drew has to go from valley to valley. So I hit this one right here, which is the next valley. The second one I did has to go through from valley to peak. So I hit this area. And then finally, the last one goes valley to peak, 1, 2. Then I got my channels. Now, the trick with your channels, let's say the market, let's say it came all the way down here, right? Let me use the arrow, something I can draw with the internet. So let's just say that the market came down, blah, 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 and then it broke out of here, this end channel. So naturally, my beginning started from my left and it goes to my right. So that'll be beginning, confirmation, continuation, and then the end. But since I came outside the end, now once this market comes back inside of this channel, it switches. So this would be the beginning. This would be the confirmation, continuation, and then basically the end. So the only time it switches is when the market ends whatever trend that it was in. So in this case scenario, it stayed in the channels until the bullish breakout here, and then it came back inside, which basically began and confirmed a new trend direction. So let's see if we can get our final channel on the hour again. I might be able to, now that I can see a little clearer. Too choppy. All right, so obviously I can't get nothing here on this time frame. So this is the only time that I will revert to the daily chart. Now this is the second option from the last option. Remember the last option to just be able to see what I can intersect. Oh, I'm good. This should work. I think this is that same channel I was dealing with last week. Oh, GU stopping now. So now I'm going from peak to peak. Oh, gotta change this color. Ending off on the base. Yep, this is that same channel as last week. All right, so my next best thing is just going to be to intersect this this valley here. So I'm gonna intersect this valley because basically I only got to go through one valley, so I can go peak through valley and end at the base, right? Let me fix this a little bit. And finally, peak through the valley, or peak the two valleys, which would be right in this area. And I'm gonna go back to my Hikanashi candlesticks. I'm gonna spend some time reviewing real quick. All right, so when I'm looking at this basically this setup here, I'm picking on somebody. I'm gonna pick on you. Which way would I start my labels since this trend is going up?
Who? Who'd you call on?
I'm calling on you, Kenny. I'm
Oh.
picking on you.
Oh, okay. Because it's going in an uptrend,
Uh-huh.
I would put beginning on the left side.
Yeah.
So I would have my beginning, confirmation, continuation, and end.
Perfect. All right, Miss Chastity, you next. You next. All right, so which way would I draw my channels on this chart now? This 15-minute chart. Or not channels, I'm sorry, my labels.
You would draw it from the left.
Yep. So this, yeah.
Beginning, right? What is it? Continuation, confirmation, and then your end, because
Yeah,
it's one.
So we got beginning here. Confirmation is always gonna come after your beginning, and then you got continuation, and then finally the end. All right. So now let's try to read these channels. See what we got going on here. All right, so looking at our channels, let me start on that higher channel, because when you do it on a daily channel, it's just like that daily fib, that daily support and resistance. It is strong, it is very, very strong actually, but it's like, it's got to be in you going off the zone, not the natural direction that is given on that chart. You're just going off what zone it is. And then if we're on a 15-minute chart, this zone here looks like a bearish trend. Yeah, so it came from a little bullish run, ended the bullish run, and confirmed the bearish trend. So we're in a confirmation of the bearish trend. I'm gonna change this color so I know that this is the middle channel real quick. Or what channel? I want to see what channel it is. I'm sorry. I'm gonna use. Let me go back to this highest time frame real quick. Also, that's the beginning. So that's the beginning on the highest time frame. All I did, because I wouldn't have been able to know where that came from, what channel that was intersected, if I didn't change the color. So the black is the beginning. So it's basically beginning a new trend direction. All right, so basically what we're gonna start to see possibly next week is the market coming into the confirmation channel, then possibly even touching the continuation. So we got 1, 2, 3, yeah. So it should be in the confirmation channel next week. Next week for this bearish trend. Just looking at the market cycle that we in currently, and all I did that was I'm looking at this 15-minute chart right here, and like Chastity said, it went beginning, confirmation, continuation, then the end, but it ended this from this wick out. So this wick out ended this little run that it had. It came down here, came down here, kind of the market kind of fluctuated. It ended. Then it ended a little bullish run, which probably wasn't nothing major. I can go to a smaller time frame and see on the 5-minute what it really looked like. But just this wick outside here allows us to know that that natural direction was over. So this would be now the new beginning, coming from right to left, the new beginning, and now we're in a confirmation zone on top of the beginning channel on that daily chart too. So it is beginning something different. I feel like it's going to begin a bearish run, but until I know for certain, I'm gonna just see where the indexes ended at for the week, just to have a general idea. Let's see pound. Let's see what the
The
pound
pound's in charge.
the pound is winning right now.
Yes, because it's
Oh,
green with 19%, but then the dollar is like way red. It's like 37% red.
trade wars at its finest, boy. So
Tina, you know the market will open up and all them numbers have changed.
yeah. But if we basing it off of just general price action right now, it's not far enough. It's not far enough even underneath this first channel. So it hasn't confirmed it naturally. It's still basically on the outside brings to that channel. Even though in this smaller time frame it looked like it couldn't be, but this is a wick. These wick here. This is actually the perfect thing on Sunday when we do our market overview. Everybody who's going into the Secret Society group on Sunday, and we start those accumulation zones. You can see here that this is also accumulation zone. These wicks allow us to know that they were taking out orders from the lower low. They wanted to get the orders from people who are selling lower, okay? And basically what's going to happen is the direction, like I just said, that first look at it, it made me think that it'd be a bearish trend. So if I'm thinking like the bank would think, 9 times out of 10, if the individuals don't know to check indexes, they're going to think it's a bearish trend too. So they got lows set pretty low. And then our next confirmation that the market is possibly going to continue up in the upside is first that accumulation zone, and then second right here, we see that test, that 3 candlestick test. Or not test, yeah, the first test for the 3 consecutive candlesticks above. And generally, what I feel like is going to happen, since these indexes ended off, the Great British Pound ended off positive, and the yen ended off on that negative, or was it vice versa? I'm thinking about the yen. The dollar ended off on that negative. I'm sorry. It should gap up, so we might see a gap. The market should pull it back up. Now, how I notice the accumulation zone is when the market is grabbing orders, it never go back to the previous low that it's done made. So this was the previous low from this wick, and then the next wick was even higher. So you got to kind of look there. The best way to really see accumulation though is from these higher time frames. So if I go to this hour chart, for instance, I can see that something happened down there. So some orders was definitely grabbed down there. It's something called a 3 count, which I'll teach you guys starting Sunday. The people who won't be in a secret society group, I'll teach you guys the 3 count. But for right now, focus on the channels. And based off what the channels are saying, we know it's in a continuation cycle, generally speaking. So our confirmation cycle. So even though this is you see this bearish candlestick inside this confirmation cycle, if I go to my 15-minute chart, whatever this 38.2 pretty much indicated to us is confirming it in this zone. So this market had to do this retest. Okay, so we ended out during Asian session. So we ended out during the Asian channel. So this is the Asian channel right here. This is the confirmation area. The market pretty much is confirming the retest to the upside once it opens back up, as well as the indexes are confirming the same thing. How about people who finna graduate out of this stage feel about drawing channels so far?
I'm pretty good with drawing the channels now, man.
Yeah, I think I got it.
Perfect. Chastity, Tina?
I'm gonna have to play some catch up. I've been missing for
I
a
think
while.
with a little more practice this evening and tomorrow, I should be pretty good by Sunday. So whenever I mark a chart after we get off, I'll send it to you.
Gotcha.
Yeah,
everybody who's finna graduate out of this stage, send me y'all charts and your setup. including your channels on there. Channels is something that's going to be progressive still, so we'll continue to be going over channels because it is an asset to your trading. But I do at least want you to be able to identify. And what I mean by that is even point out what it is. Like if this is the valley, you're going from valley to valley, you know how I got these little boxes here, at least point out those boxes too, because all of this stuff is going to be relevant, you know, and we're going to really get into that, into this next phase. Tina, how you feel about on channels? Candace? O'Shea?
I'm good with them when I can clearly see the peaks and valleys. But if it's like almost straight lines, then I get kind of confused.
Yeah. Want me to tell you what you do, Tina, what this is something called a blowout. Basically, if you can't get the channels on the chart, that's not the pair to trade for today. You want to go to stuff that you can clearly see. So if it's a blowout, that's basically all that consolidation. Just like it was hard to draw these, but the reason I still did it is because I wanted to show you the alternative of drawing it on a daily chart as well. But if you can't see your channels or you can get your channels, then it's usually best to go to the next pair. Like I said, that's something that we're gonna talk about in y'all next week, though.
Okay.
Candace, how you feel about it?
I feel pretty good. I had sent you one last week, but you're a busy guy. You're a busy person. So.
You said, oh, yep, you sure did. You sure did. I think I glanced at it too, but I didn't reply around. Wait, I'm thinking of low. Matter of fact, I seen low chart.
Well, like what Candace and Tina, if y'all want to practice later, we can. You know.
I'm good with that. Also, I kind of don't know. You remember earlier where it was making the W?
Mm-hmm. Oh, was that what pair?
This was this one. And like you said, we couldn't do the line there. Something we had to do we had to go back to the day chart and do an intersecting something.
Oh yeah. Intersecting.
I haven't really got to that yet. I was only doing it on ones that were like definite charts.
That's the rule of thumb though, Candace. Like if you can't see it because it's basically a blowout, you know what I'm saying? If you can't see it, then you're supposed to go on to the next chart because trading is all about high probability. You know what I mean? You want to be able to catch 50 pips while you sleep, you know? So it's all about that high probability setup. But I at least want you to know what to do just in case. And that's basically what you'll be doing is you'll intersect a valley or a peak. So what that means that the intersection would be like this, Candace. Let me find some. I'm drawing on this side. All right, so let's say we got our valley right here, right?
Mm-hmm.
And usually we want to get it right at the top, right?
Yeah.
And let's say we got another valley right here. So we're going to connect these two. But if it's, now I'm ready to draw this other one. And let's say in between here, I got one valley and then it's choppy, blah, 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 real choppy. So now I might only be able to intersect it, you know, and come to the base. So I'm not getting it right at the top area. Because what I'm thinking about is if I gotta get two valleys. So in the best case scenario, I might be able to hit one up top and I might be intersecting the third one. Just through area.
Oh, for the third line, I thought you was doing the second line because I thought the second line you'd have to go to the peak.
Yeah, because so the second line, the second line. The third line would possibly be where the intersection will occur simply because we have to get two peaks instead of one. We usually always be able to get one peak inside that consolidation too. But it's usually the hardest part is getting inside that second peak when we're doing that third channel. Trying to draw. I don't even know how to draw it. But so we will basically have this, and we can go to the base. And let's say we got. Let me look for the bullish one. You see how I couldn't get my second one on my. Sorry. So I can get my second one down here, and I can draw it to the base. I hit the peak, boom, drew it to the base. But this third one, you see how only way to get out, I have to come all the way out here and try to come back in. But your thing don't work that way.
Mm-mm.
So I'll only be able to intersect it and hit this one and end it.
Okay.
So I intersected this bullish area right here, or this peak area right in there. And I at least hit this final one at the bottom. And I ended. Sorry for the penmanship. I know it's hard to read.
No, I understood.
Yeah, so that's what I mean by the intersection. But everybody send me charts, and this weekend I'll be able to check them all, and that way y'all can get that practice too.
Okay.
Get that practice of doing the peaks and valleys. But remember, everything is high probability. That's what it's all about. And most importantly is to generally understand the beginning, confirmation, continuation, at the end, because it's the cycles, you know. So once you get these cycles, now when I introduce this stuff to y'all, you'll know what's going on. You know, the pen pickup orders, Tokyo channels, and shit like that. So to where even your 38.2 zone entry is going to start to make more sense to you. And I'm going to show you how to protect yourself with the 38.2 channel. So just in case, because we all go through it. Like this week, I went through a 38.2 channel that gave me 3 consecutive down, and then it pulled up. And then what I realized, and it was actually, I think this, what was I doing? I think I got 3 consecutive up and it pulled down. So I think it might have been this clear actually somewhere over here. But what I realized is that, and what made me start to think of the accumulation zones in the Tokyo channel was that these pins were picking up orders, and it's something called a 3 count. Once you get 3 pins, that okay, perfect example right here. I remember Tina, she talked about this trade where she, got out early. Now, we hadn't got to this point yet, but these 3 pins, if you see 3 pins like that, and you might have seen on your 38.2 zone, it might hit it 3 times. And every time after that third pin, that third retest, is always going to be a Russian price. That Russian price will always follow it. So we gonna start to talk about that too. So now you'll be able to even capitalize a lot better on things. So even here, over here is basically a 3 count. You got those 3 pins below, and how you know that they're pins is that, and it's picking up orders, is that they never go back to that same area. They rarely go back. I'm not gonna say never. You can't say never with trading, but they rarely go back to that same order because they picking up those lower shorts. So people who thought it was a short picking up shorts here, it hit 1 pin, 2nd pin, 3rd pin, rushed in price. All right.
And they have to all be 3 consecutive of the same candles in order for it to.
Yep, it's the same thing. Yep, with trading is always 3 count. Just like we do the 3 consecutive candlesticks above or below. Now we're going to talk about the accumulation areas with the pen pickup orders. The market basically picking up those orders, and it's basically triggering stops. 25 to 50 pips. This is just this is good for you to know, because I know a lot of people here. And we talked about a little bit about market makers and stuff like that. Basically, they pick up orders because that's the way they get their bonuses. That's how they get paid. So we'll talk about that in the next group. We're gonna start to talk about it to where we kind of just putting icing on the cake for everybody. And at this point, pretty much good. So any questions so far? Everybody straight? All right, so I'm gonna give y'all a general idea of basically what's to come next for my people in this group. So what you'll be learning is basically how to arbitrage trade. This basically using correlations. So if, for example, let me find this. And me and Debo was talking about this yesterday. This arbitrage trading. What's that? Secret Society folder. All right, so we're using correlations to pretty much arbitrage trade. Now we get into a lot of the candlestick patterns, a lot of the reflexivity, the setups. So this is why I kind of had y'all go through these phases, because this, without y'all knowing the stuff that y'all know right now, it'd be damn near impossible to understand what we're going to be talking about coming next. So arbitrage trading is basically taking these three currency pairs. Each has its own or each one of these. So let's say the Euro USD, that goes the same way as USD JPY. So therefore it calls EUR JPY to pull up. Now, the reason it works is multiple reasons, but like I said, we're gonna get into that. And you're gonna be arbitrage trading that singular pair. So the one that have the most pressure based off of looking at two individual, two different currency pairs. So first I'm going to show you what the even word arbitrage trading means so that it makes sense. But anyway, we need data from two different areas in order to arbitrage trade, especially during this trade war stuff. Like I was telling Debo yesterday, it really is like I haven't arbitrage trading in almost like 2 to 3 years because it ain't always necessary, but right now it definitely is. I wish I could find it. Oh, I spelled it wrong. That's fine. That'll work. All right, so what is arbitrage trading? Simultaneously purchase and sale of an asset to profit from a difference in the price. It is a trade that profits by exploiting the price difference of identical or similar financial instruments on different markets or different forms. Arbitrage exists as a result of market inefficiencies. And that's basically what we got going on. We got a lot of market inefficiencies that we don't capitalize off of by arbitrage trading. And basically, we're going to use two different asset classes. We're going to use the indexes and we're going to use the currency pairs, but we need two different ones. So first off, we'll have, there's basically a middleman when it comes to arbitrage trading. And if I'm looking at, let's say, what was I looking at yesterday? GBP USD and GBP JPY. Basically, the middleman is the US dollar. So basically, if GBP USD is going down, the dollar is stronger than GBP USD, or than the pound, I mean. And if USD JPY is going down, the Japanese yen is stronger than the US dollar. If the US dollar is stronger than the pound, then therefore it has to be, the Japanese yen has to be stronger than the pound, because the pound is getting beat by the Japanese yen at that current situation. So this stuff that we're going to go over, I'm going to show you exactly how to arbitrage trade using different techniques and things like that. So the next group is going to be a lot of micro and macroeconomics. So we're going to be really getting into the fundamental aspect of trading, arbitrage trading, and also combining the information that you got right now currently and applying those things.
So basically what that was, if one pair, with the pairs you were showing, if one pair is doing one thing, the other pair, then that means that other pair is going to do the same thing?
Yeah, so Euro USD going down, USD JPY has to go down. This is called a correlation. And in turn, we call Euro JPY to go down. Now, the reason being is the euro is weaker than the US dollar. So the dollar was strong and it caused Euro USD to go down. But if USD JPY is going down, that means the Japanese yen is stronger than the dollar. So if I'm going Euro JPY and I know that the dollar was stronger than the euro, so I know the euro would be weak, and I know that the dollar was weaker than the Japanese yen, then the Japanese yen would be strong. So in this case scenario, Euro JPY would have to go down. So that'd be asset class 1. We're using currency. Then the second asset class for the double confirmation basically would be the indexes. You know, so if that index, and that's why I wanted to back test something that Tina was asking about, if both indexes going the same way. If one of them has a greater percentage than the other, then which one will be weak, or which one?
I
Which
asked you
one?
that too. Remember?
Yeah. Yeah, so this allow us to backtest that. It's gonna allow us to backtest that theory, to figure it out for the simple fact that now we have two different asset classes, and we have basically a middleman, that's gonna determine it all for us, and this is where everything pretty much, this the last 2 weeks of y'all lecture stages, as I like to call them, and to where now it's a lot more hands-on, and we'll go into more so on the or what does I call it? Being dependent on. So now I'm gonna show y'all, I'm gonna teach y'all how to teach others, what we doing right now. So that's why you'll be in every group, and now you just kind of seeing how I'm instructing the people and taking them through the proper foundations and steps. You'll be able to do the same thing and kind of help them out the same way. Because the trick to what we're doing is we can't just bund all this information in 2 weeks or in one session for them, because people gonna be like, what the fuck is going on? You know what I'm saying? So it's just about, I'm gonna be showing y'all how to teach others now, how to teach others what y'all know, and applying what y'all done been taught, making sure now I'm more so critiquing the things that y'all doing when it comes to your setup, and holding y'all accountable now at that point to know exactly what we're going through. But you'll have all the information, so if anything you ever get stuck with anything, now hey, I can hop on beginners group 1. So now you got more access to, you'll be able to be on 3 different sessions, you know what I'm saying, throughout the week, rather than just one session at a time. Just like how Debo flowed from every session, you know what I'm saying? He go from session to session to session. Ken do too, but I don't know where his ass done been at, Ken. You didn't
Man, dog, is I got jobs out here. They got to call me, man. I got my
Yeah.
bag can be.
I hear you, brother. I hear you. But yeah, so y'all will be kind of going into that stage in this last group, or in this last secret society.
Yeah.
I hear you. I hear you. I'm gonna add y'all back to all the groups on Sunday. So you'll be in beginners, advanced, and the secret society group. All right.
So, if I understood that right about the arbitrage trading,
Yes, ma'am.
if you're looking at the pairs and you feel, in other words, if you look at just say Euro USD and USD JPY, your safer bet would be the Euro JPY.
Exactly. High probability setups. This is what you want to focus on. And this is why I was telling you, if you have those channels and channels don't work for those pairs, go to the next pair. Because our goal and what I'm showing you, you're supposed to be able to make 50 pips while you sleep. You know what I'm saying? Instead of having to watch it just form all day and you getting faked out, you're going through the emotional distress that the market do. So now we're going into more so on why the market even doing the things it's doing, the reflexivity behind it, the causes and effect. And that's why I was talking about the accumulation zones and things like that, because everything now is going, you got the setup, okay? You pretty much are finished with setups. You got all the details that you know to know how to set up your chart. But now you got to know what's going on, the reflexive formation of it. So where now you can find the highest probability setup or the highest probability trade and do a setup on that chart to where now you can react and you can leave that trade alone. You can leave that chart alone or leave that trade alone and let it form, let it finish playing out. Because it becomes too much of it's a job at that point. If you got to constantly watch this trade go over and over and go through every emotional cycle that it gives you. You know what I mean? So this is why I'm gonna teach. This is why I'm showing y'all this kind of last, kind of like I did with everybody. I wanted y'all to get those trade jitters out. You don't really got to trade everything you see. Now it's all about high probability trades. We're looking for the best possible trade based off of the best factual data that we find. Somebody in the refrigerator. So that's the long way to answer your question, Tina.
Okay. So, The one other question, if you could get to it sometime before we get off, is like long-term trading, when you want to hold a trade for a month or more.
Yeah.
How do you do that when the market will change directions in the course of sometimes within 5 days, sometimes if you're holding it for 2 weeks, it'll change directions and completely go opposite. So then you end up losing over 50% of your actual profit. So how would you?
I'm gonna tell you exactly what you do. Now, you got the funny part about it is you got all the skills that you need already. What I showed you in the beginning, I showed you what 4 time frames.
You showed us the daily, the
4 hour,
the
hour and 15
hour and
minutes.
15 minute.
So if I want to trade longer terms, I have to go to the monthly, the weekly, the daily, and the 4 hour. I'm doing the exact same setup, and each time frame means the exact same thing, just transition to a higher time frame now. Now when I'm looking for those double bottoms, double tops, I see these different patterns. I see them on the higher time frames. So basically the monthly will be your direction to hold it long term. The weekly will be your the momentum. The daily will be your take profit and stop loss. And the 4 hour will be your entry. So that makes sense, Tina?
Yes.
So that's all you're doing. It's not a different skill. It's not a different process. It's just a different time frame that you apply that process to.
Hey, Rich,
Yep.
do you hold any trades for a month?
I done hold some for actually 2 months. I might have,
bro.
I ain't got it in there. I might have it in my old phone. I'll have to see if I can find a picture. But I ain't hold, it was only like a 0.5 or a 0.10. I can't even remember now. But I had held it for like 2 months. And it wasn't even, it was just like, because I basically had the same questions that she had.
Right.
And I'm like, okay. And I asked my mentor how to do it. And like, same thing I just told her, you already got the tools, you know. Now you just go to the higher time frames and apply those tools. Just like if you want to scout, Tina, now you do it on a smaller time frame. Now you would set your chart up on, let's say the 4 hour will be your direction. The hour would be your momentum. The 15 minute gonna be where your take profit and your stop loss is, and the 5 minute will be where you find your entry. So you see how we just reverting from different time frames for different styles of trading. Right now I showed you swing trading. You can revert this same setups and these same analysis to smaller time frames, depending on the type of trading you want to do, you know, for that specific period of time.
Okay. So like, say for instance, you're holding a long-term trade, or you're trying to hold a long-term trade. And say for instance, you go up $100.
Yep.
And within a day or two, it starts retracing. And
Yep.
so your $100 is down to like 45.
Yep.
Do you continue to hold it? Because if it's in the, say for instance, it's in the continuation zone, but it's doing a retracement, or would you take profit and then go back in and reset up your entry to go back in on that same trade?
Never. Now, the reason being, okay, so it's a different outlook that you have when you're trading longer term than shorter term. On the shorter time frames, only thing you know is fluctuation of price. So all you will see is back and forth movement, money go up and down, up and down. You hold your trade for 30 days right here and never went back to the entry. You hold your trade for another 30 days right here, never went back to the entry. The only time it went back is right here, and it never even hit your entry. You still up, let's see what that would be, almost 200 pips. So these candlesticks are firm. The monthly candlesticks are firm. This is not fluctuation of price. This is actual direction, okay? So the market is never going, unless it's just like a blowout. Like I said, the market just completely, some bullshit happens, you know, and it kills you. But this is why once you get these accumulation zones too, and you understand what these mean, it's going to be impossible for that to happen. So let's look here. And let's just talk about accumulation real quick, because you might be able to see it now. The market ran lows. It got the people who got all the sell limit or sell stops down here. Ran that low, pulled them all the way up. Never went back there. Market ran the lows again over here. Ran these lows, pulled down even lower because it didn't accumulate enough positions. There wasn't enough traders in that area, so it went down lower. Boom. Came back up, never went back to that same area. Got them trapped. Accumulated more orders. Ran back up, and it just blew them all out. Blew them all out from there. So now, if I want to see what's going to potentially happen here on GBP USD for the next month, where were the orders getting ran at? Okay, this was the highest area of the buyers. They pulled all those orders, pulled the market down, never went back in that area. Same thing, pulled the orders, the buyer orders from here, pulled back down, never went back in that area. Finally, right here, pulled the buyer orders, never went back down, and it came into this area. Now, when you do your setup on, okay, oh, we got a daily. Oh, that's perfect. We got the daily right here. Okay, so when I do this 38.2 zone setup, what am I looking for, Tina? 3 consecutive below, right? 1, 2, 3. 38.2. So if I want a long-term trade, because this is a daily, I can't worry about none of these up here because these are too small, but this daily one is perfect. If I want to sell this market, because naturally this market gonna go short, it's gonna transition because it's accumulation of price. The market has never went back up to these areas that it grabbed orders for how many months? 1, 2, 3. For 3 consecutive months. It grabbed orders from all the way up here, never went back. All right, so these are the buyers. Grab those buyer orders for 3 whole months. 3 count, 1, 2, 3, boom. Once I want to buy or sell, I got to sell in this zone. And I can sell in this zone for the next month if I wanted to. You know, so generally what's going to happen is the price going to pull down. Now, if I want to know more about this, in your folder, remember these, I got to go to your advanced folder right quick. Because like I said, you got all the information that you need. It's about knowing when to apply it. It's all it comes down to. So the questions is good. You know, your questions is great. I've seen some people writing these and drawing these out, right? These are your position trade setups. These allow you to know what this says, 7 to 65 weeks, 7-week minimum, 7 to 65 weeks, 4 to 7 weeks, 5-week minimum, 9 to 16 weeks. You find what pattern is occurring on this monthly chart, or especially if you swing trading, you find not swing trading, position trading, you find what pattern is generally occurring. Let's see what we got here. We got a reverse, kind of look like an ascending base. So we got an ascending trend. Let's see how long that at. I got 1, 2, 3 humps. Let me see. Should be right. 1, 2, 3. So this is we have a descending base on this chart here. So hump 1, let me draw my annotate key real quick. But like I said, y'all got all the information. I promise you, you have everything that you need to trade whatever style fits you, because everybody gonna trade a different style. Y'all gonna all know the same procedures and techniques, but some people might not be a swing trader. Some people might not be a position trader. They might only be a scalper, you know. It might be a scalper and a swing trader. So you'll have different styles, but the technique is all the same. So I got a descending base. And this trend can last for how long? This descending base can last for 9 to 16 weeks. So 9 to 16 weeks this trend will last for. And basically what you're getting in, look what I've been teaching y'all the whole time. What is this identifying? The high, the low, right? It's showing you the trap. It's showing you the trap already. You know how to trap the markets already. Like I said, you got all the information that you need. It's already here for you. It's just kind of now, like I say, y'all going from the instruction stages, you know, from an instructing thing, like to now hands-on. Now, after y'all get into that secret society group, now it's hands-on. You know, now it's ask the question that you need, you know, relevant to your potential circumstance, your potential setup, you know, what you're doing at that potential time, and what do you see? And I'll allow you to know what concepts to play. You know what I'm saying? Those epiphanies, like I always say, you know, having those epiphanies. So this is generally all. That's all you do, Tina. When you want to go long-term position trade, you literally go to the higher time frame. The monthly would be the direction. The week chart would be the momentum. The daily chart would be the stop loss and take profit, and the entry would be on the 4-hour chart.
Okay.
All right, let me see. Anybody got any more questions? I got a training I got to get on. The last one. What is
I have a question.
Candace, Miss Candace, I hear you.
I was wondering if you use the relative strength index as a strategy for your trade.
RSI, yeah. Well, when I want to compound, well, let me not even say the word compound. The indexes, the two indexes that I use, or sometimes three. Sometimes I use Ichimoku and Ohio, but when I'm looking for strength, I use the ADX. So the ADX basically is this index over here. And oh man, y'all asking the best questions. There's all these questions. They got answers for y'all in the next stage. But I'm gonna answer for you real quick. We use the ADX, anything above the 50%. So when the market gets above 50 up here, it's a confirmation for, or not a confirmation, it's a continuation for that direction. It does do the crossovers and stuff like that. Like right now we had a crossover, which this just means that we don't have this consolidation, and it's below, it's at 15%. So when I'm looking for strength, I like to use the ADX.
That's funny. Beat it.
Yeah, this ADX don't give you direction though, as you would know. It's not gonna give you direction. It's just giving you the strength based off of what you perceive in your general setup.
Okay.
Right.
Because you said in the next group, we're going to learn how to start, like, if we want to use, like, the indicators and things and stuff.
Yeah, like using the scanner for yourself as confirmation or whatever the case is, like different indexes, you know, that you'll be able to use. But like now you at the stage to where you kind of your own index, you know, relatively what's going on to where you're not dependent on that now. Now is everything y'all do is confirmation. You just want confirmation for your general setup. So that's why it's always it's always the best to start somebody off that last. You know, so even when y'all, you know, Chastity, Tina, Candace, when y'all got y'all group going on, that Candace Chastity was talking about the group she was gonna make for the ladies. Always introduce indexes to people very last. You know what I'm saying? So that's the very last thing you want to talk about with them. Now, even if y'all like do your own inner circle group inside of the group that you're making, that's fine. So where y'all can talk about that. But as you see, like even with our advanced group or our beginners group, we don't play games in the beginners group. But in the advanced group, we do. You know, you kind of want to separate things from different stages. So right now they need to focus, you know, on what they need to focus on. And the same thing like just with indicators, you know what I'm saying? Indicators is last because it'll cause you to depend on that way too much. And you'll just, it'll be obscene at that point.
Gotcha.
All right.
Yeah, I'm still waiting on some more of the women to friend us because I talked to Roxanne about it. Tina's okay with it. I haven't talked to Candace, but I'll catch her later.
I'm friends with you already.
Right, I know you are, but I'm talking about, he said it's about 13 of us in there. I know Anil, Bernadette, some of the newer ones, but I'm talking about some of the people who've been in it, the ladies and stuff, and none of them has like responded or said anything.
Yeah, so we're on Sunday when I move you to different groups and I add you, you'll be in all the groups by that point. Then you'll be able to kind of conversate with them and get them to know, what's up and what's going on. What I say you should do, Tessie, what I think is I think you should wait till they all get to that final group. You know what I'm saying? So let them go through.
Yeah, this isn't a rush. We just want to get everybody at least friended first, that kind of stuff, so we already know who is who, and then we were gonna sit down and collaborate ideas together. So like I was telling my students,
got you.
it's not that I'm in control or she in control or Candace. We'll collaborate. We'll figure out a day of the week that works for everybody, and then we'll figure out what we're gonna do. Like I say, to show that women trade, because that was like one of the things that was brought up at the conference, at the convention. It was when Dr. China was talking, she was saying, that the MLM used to be a male-dominated industry, but women have dominated now in the last few years. And now with trading, I think in IML, I wanted to say, she said it's like 50% women right now. So we're starting to dominate the industry, but it's still a much bigger industry than IML as a whole. And that, that's what kind of gave me the idea to do that, the way that the women came together and stuff.
Got you. Yeah, that'll work. So yeah, y'all, just go through it, figure it out the way, however you want to do it. I don't really, it's up to you and y'all in general, you ladies in general, to figure out how y'all want to run it and stuff like that. But Sunday, my first wave of people test out, going to the next stage and study this weekend. That's it. Try to get as much as you can done. Shoot me those charts. Like I said, I got to get on this session. I know, bro, like, what's going on? It's supposed to start at 7, but it's okay. We good, right, bro? Let's see, I'm on here. All right. Yeah, guys. So I'm gonna go ahead and get this one-on-one done. Get ready to go to the movies after that, and I'm gonna talk to y'all on Sunday.
Thank you, man.
All right, no problem.
Good night.
All right, good night. Yep.
All right, y'all have a good one.